Righty. Hi, everybody. Andrew Mitchem here at the Forex Trading Coach. Really excited today to be joined by Marc Walton from Forex Mentor Pro. G'day, Marc. Nice to see you.
Good day. How are you?
Very, very well. Thank you. I thought, Marc, we'd just spend half an hour or so, just have a bit of a chat to people. Been trading, sounds like similar amount of time,
Yeah,
similar backgrounds, and just give people a bit of a insight of what we've done over the years
yeah,
and the pros and cons of what we've done and how we're trading today and the changes we've seen.
yeah.
So,
As we're just saying, your path is very similar to mine. We neither of us came from finance. I
yes,
actually failed maths O level 3 times,
right.
and it's ironic. I also have something called dyspraxia, which I never realized until one of my kids had it. But the only way it really affects me is I'm kind of number blind, which is bizarre considering what we do for a living.
Yeah, yeah,
But
yeah.
but then again, it's to me, it's all about pattern recognition. And so I think the main thing is for folks not to get too stressed with the math side of things. As
Mm,
long as you can control the risk and work a simple calculator to get the risk right, then maths is not important.
yeah, sure.
Um, I was saying to you earlier, I left the UK, well, I left the UK early 2000s, went to live on a little island off the coast of Africa, the Lanzarote in the Canary Islands, which was a beautiful place to live. And I went to sing and play guitar in a band for 5 years, and thought I'd semi-retired at 40. And then you realise when you retire, you spend more money than you ever did because, well, the kids in school didn't help, and then you've got so much free time. So I started looking at trying to make money online, stumbled on Forex, which 20 years ago, there was hardly any of it. I
Mm,
mean, we have the other extreme nowadays, as we know, with YouTube, where there's millions of people stood next to their mate's Ferrari or whatever in Dubai and pitching this, that, and the other. Having said that, I mean, I paid $4,000, I think, for a course 20 years ago,
yeah.
and struggled like everybody else. And I did a webinar the other day with my mentor, Rich Friedgen, who's a psychologist. And I have the list here of things that went wrong in my trading. And when he put this slide up for the benefit of people in the webinar, it was like, oh, crikey, it's me again. So I'll just read you a few. It's
Yeah, please.
repeat the same errors over and over again. Over trading, afraid to pull the trigger, over leveraging, revenge trading, afraid to lose money, ruled by emotions, cut winners short, let losers run, not disciplined, jump from system to system, and there's many more.
Mm.
And I did all of them. And I know from your background with farming and things, you probably, I'm guessing, did the same thing. Is that your reason for getting involved?
Yeah, trading. So I got into trading actually as a result of having a young child at the time and going through divorce. It
Oh,
was
okay.
it was forced on me. So I was dairy farming, and which I was when my family had been dairy farming through in England, moved to New Zealand. It was nearly 30 years ago. Had the dream, well, I eventually did some work, different companies, actually bought a farm, and it kind of all then imploded. It all went wrong,
All right.
and it was like, what do I do now?
Yeah.
And I was looking after my son, not full time, but fairly close at times. And it
Yeah.
was
Yeah.
like, I can't go and be a rep for a company. I can't go and work on another farm. What do I do that allows me to work from home and look after him? And now, like yourself, back in those days, it was unheard of for a bloke to
Yeah.
work from home
Yeah.
by yourself. It was unheard of to do anything on the internet pretty much because it was dial up still. You know, 1 gigabyte a month was like this. Well, I remember when I went to 10 and everybody was blown away that I got 10 a month with dial up speed. But and so I stumbled in. I paid 5,000 New Zealand dollars and went up to Auckland and did a weekend course up there.
Yeah.
And although when I look at it, it wasn't great, I can't knock it because it got me into trading and
Yeah.
it gave me the buzz of this whole new world that I didn't know existed.
Yeah. Yeah, well, for me, it was a necessity as well because, to say, we semi-retired, or I thought of semi-retired, and we were just burning through money. I'd
Mm,
budgeted that, let's say we were going to spend 25, 30 grand a year. I think the first year we were there, we went through 50 and it was okay. need to do something about this.
Yeah.
And it was born out of necessities, very similar to you, because if I hadn't been able to get Forex to work, I would have ended up having to go back to the UK
Yes.
with my tail between my legs,
Yeah.
because the only work in Spain, Canary Islands for a foreigner would be in a bar.
Yes.
And my wife said, if you ever buy a music bar, I will shoot you. So, so thankfully I didn't do that, and I got into Forex. And the other thing is I'd employed people all my life until that point, and I really didn't want to go through the hassle of
Right.
employing people ever again, which is great. This is why this is so good.
That's
You know,
exactly right. So when you started them, like, what kind of, like, how long did it take you to, I'm guessing you did like me, you bought ideas, systems, ebooks, robots,
Yep.
back testing, everything under the sun, and then suddenly something clicked to make it go from losing money to working.
The course that I bought actually wasn't bad at all. It's very similar to what I do now in many ways. It was all about support and resistance, and it was using a lot of EMAs, and I only use a few now. But in general, it was support and resistance. The issue I had was it looked too easy, and you know, I'm a smart fellow. This is not difficult. I can do this. I actually believe most people can do this, but the problem that screwed me up was my head, and I went through all the issues I've just mentioned, revenge trading, etc., etc. But the biggest thing for me was that I would go through a period of time where I would win, and then I could lose it all. The last time I got to the point of quitting was I went 5 months consistently making money, 3 to 5% a month on a big account. This is okay. Slow and steady wins the race. And I lost most of the 5 months profits in a week. So for me, the periods between meltdown got bigger, but the same result was there. So I took a few months off, and to basically let it all settle in my brain. And thankfully, I found a retired trader to teach, because if I hadn't, I don't think I would have ever made it. And then for me, discipline's always been an issue. And I think when you come, the background I had before I'd left the UK, I had a frozen food company, and so we had quite a lot of staff, and you come under lots of rules. But we also supplied the prison service with food, so we were highly regulated. And then when it got to trading, it was suddenly, I've got the cash. Here we go. You know,
do what you like.
Yeah. And it's ironic, because within a year of meeting Rich and him ironing out the issues, and half the issue with the psychology is making yourself self-aware, and then the other part is the discipline. And he introduced me to a fund in the US, and it wouldn't be allowed nowadays. But I was trading remotely from Lanzarote for a fund in New York, and they basically give you a book this thick of rules, and if you break the rules, you're out.
Right.
So before you take a trade every time, you go through the checklist, you make sure everything is spot on. And I say to people nowadays, always use a checklist.
Yes.
I tell folks to look for 5 reasons. If you don't have 5 reasons of confidence, walk away. And so having a checklist and having somebody looking over your shoulder made me a better trader. And I worked for them for 3 years. Then in 2008, I started doing it for myself and doing it for my own clients, and the bad habits started creeping back in.
Right.
Which is when I started posting on Twitter in the early days. Twitter in the early days wasn't the war zone it is now, and people were genuinely helping each other. And I was just saying, oh, you know, I'm going to short the euro pound today here for these reasons, and people asked me to teach them. And I thought, okay, and that was good, because otherwise, because I'd got to the point where I was only placing a few trades a day, and now I place maybe one a day, I had a lot of free time on my hands. And when I have free time on my hands, I'm dangerous. And even today, last year, about 6 months ago, we had quite a lot of new folks in Mentor Pro, and they wanted to trade more actively. So I day traded for a week. And at the end of the week, I think I took 8 trades, and 3 of them I shouldn't have taken because they broke my rules. And I got up twice in the middle of the night because of news. And by the end of the week, I think I'd lost 0.5%, and I had spent 20 hours in front of screens and all the old things come flooding back. So I think the other thing people need to be aware of, every day, you've got to be able to stick to the rules, because otherwise you're screwed. And success is as harmful as not knowing what you're doing, as you know.
That's a really interesting point because, as you know, I fly a helicopter privately, and the checklist is needed.
Yes,
You
yes,
know, you have to go through a checklist. It doesn't matter how, even if you're like a pro doing it daily, you
yes,
still go through a checklist.
yeah,
Because that one time you don't go through that checklist and you miss something, like, obviously trading can damage you, flying
yes.
can do a bigger damage. But similar thing, you're either gonna,
Yeah,
you're gonna overcook an engine when you start, or you should have checked something that you didn't,
yeah,
pre-flight, in-flight, whatever it might be. So yeah, like I'm with you. The checklist is
yeah.
important, and I find that really an interesting story how you, with all your experience, can still drift back
Oh,
to
yeah, yeah,
going against those rules if you
yeah,
don't have them set out.
yeah. And well, again, I said earlier, you've got to be able to introspectively look at yourself and see what you're doing.
Mm.
And my mentor had said it with me, if you don't feel at least 7 out of 10 in health and psychology and general feeling when you get up, don't trade.
Yeah,
Because,
yeah,
and that's when you're day trading. So I don't do that every day, but and in truth, I don't keep a journal every day. But if you're new, until you've been doing this for years, you need to keep a journal, as we would both agree, I'm sure.
absolutely. So you mentioned new people. So someone new, they've, like you said, they've been kind of conned into the YouTube and
Yeah.
Ferraris and Lamborghini stuff. Um, what would your suggestions be for someone new looking at trading? About where do they start? What kind of things should they look for or avoid? What
Hmm.
platforms maybe? Like, should it be technical? Should it be fundamental? What should they look for?
I traded, well, I say I traded stocks in the 90s. In those days, we worked off news sheets and you had to ring the broker. So
Mm,
it wasn't like we know now. And I used to think technical analysis was tosh. It was nonsense.
mm.
And then when I learned to trade from this DVD series, it suddenly, oh, cracky, this works. This fib level works, and this works, and this works. Oh, actually, and so that was good for me. And then I traded really for the fund until 2008, 2009, just technically.
Yes.
And then when the financial crash came along, and suddenly it was the what the heck moment, I started to pay attention to fundamentals. So nowadays I am 70% technical when it comes to trading Forex, and I am 30% filter it with fundamentals. And
Okay.
so I have a bias fundamentally. So I kind of say to people, look, if you're trading the New Zealand dollar, for example,
Mm.
what do you know about New Zealand? And they'll go, I think they've got cows. Yeah, okay, well, it's actually a good clue, but what do they do and who do they sell it to?
Yes.
And and one of the big concerns, obviously, in your neck of the woods is the Chinese. If the Chinese move into Taiwan, your economy and Australia's economy is going to be in the deep doo-doo. So I use a mixture of both. When it
Yes.
comes to crypto and when it comes to stocks, I'm 70% fundamental and 30% technical.
Okay.
Because the crypto, unlike you, I don't trade crypto, although having talked about that a little earlier, I'm going to have a look at it now.
Mm.
But I basically bought and hold.
Right.
But I bought crypto that they had to be faster, smarter, cheaper, revolutionizing the sector and being used. And did really well because I got in 2019. I started to understand crypto.
Mm.
February 2020, I bought my first Bitcoin at 8 grand. It crashed to 4,000 the following month with COVID, but then recovered. But I mean, by the following January, it was up at 50 odd. So it was a really good time to be in.
Yes.
What I did as well with that is I'd learned the lesson. When I traded stocks in the 90s, it was very similar to what's going on in crypto now. In 1995, 96, when it started to boom, everything went up. It was easy, and I was naive at the time. I didn't take my profit. I didn't get out in time, and lost a lot of it. With crypto this time, what I said to folks is, look, if it goes from 8 grand to 20, take the stake out.
Mm.
If it goes up to 30, take some profit out. And then we
Yes.
try to buy more on the dips. So when the crash came in the April of 21, I still hung on to everything I had was bought and paid for, and I'd made a profit. And so trying to kind of use the same skill set Nowadays I'm involved in crypto. I started buying gold in 2022 because it was obvious after all the money printing from COVID that there was going to be an inflation issue.
Yes.
So I caught that at the right time, and that's fundamentals. And then I use the technicals to get in, and same with silver. So I have more silver than gold, and that's technically because in 2012 silver was up at $49.
That's brilliant.
So
Yeah.
technically it's got the room. So I
Yes.
think that the more you know about how the financial world works, how everything's interrelated.
Yes.
I look every day at the DAXI, I look at the US stock markets, I look at gold, I look at crypto, I look at Forex. I'm trying to work on a database where the big money's going.
Yeah.
And if it's not in Forex, that's fine. I'll leave it. I'll go off and if this is where the money is, this is where I will go for the day. And I don't spend a lot of time a day.
No, that's brilliant. Thank you. That's fascinating what you said about silver. I had conversations with people back then when it almost reached 50, didn't it? It didn't quite get 50, but it was very close. And when it started, pulling back, and I said to people, well, it was $20, let's say. I said, well, for silver to go from 20 to 40, obviously it doubles, but it's not needing a new high.
Yeah.
This is like, I'm talking physical silver.
Yeah.
Whereas gold at the time was whatever it was, 2000 and whatever the figure was, for it to double was a massive move and to make a brand new high by quite some margin. And so I always thought from with silver, with its electrical capacity, its medical ability, in every electric we have, but most of it's thrown away because it costs more to extract it than it does to, so I looked at all those things and I thought physical silver is definitely the way to go.
Yeah.
I find it really interesting that you went and said that exact same reason.
Yeah. And nowadays with solar panels, electric cars, there's a new car. I can't remember which manufacturer. There's one of the Japanese manufacturers supposedly bringing a new electric car out that will do 900, I'm not sure if it's kilometers or miles range on a smaller battery.
Right.
So they reckon there'd be half a bar of silver in each engine.
Yeah.
So the thing is, gold is the ultimate safe haven, as we know, whereas silver is being used. And they say technically it should. So I was buying silver at $16 and $18, and I started buying gold again at 1800.
Yeah.
But like you say, gold technically 4 times rejected around 2000. It was just typical double top. But what pushed it through was the situation in the Middle East. So again, the fundamental side of it, well, this time could be different. So I say, and I think as well as we get older, to be able to go into different markets and use the same skill set keeps you mentally alert. I'm studying options at the moment, and because of course the issue when you buy a physical asset, whether it be a stock or you buy a Forex trade, the problem is always the stops. Whereas if we could use an option creatively, I'm kind of thinking around that. So always trying to think of new ways of doing things. Otherwise, you would die of boredom.
And I think that was one of the nice things that we chatted about before we started this is that, I look at your website, Forex Mentor Pro, me, the Forex Trading Coach, but we've both diverted into other markets as they become available to us. I still love the Forex market, but like you said, at times it's been a little bit boring in the last few years. It hasn't been quite as good as it was if you go back years ago. I mean, I remember the early days when I started and getting up in the middle of the night here to trade the non-farm payrolls. The employment change is called today.
Not now.
That's right.
No, never.
Yeah, well, in the early days, for me, it was just magic because it used to jump 300 or 400 pips within, like a few seconds. And you put a straddle trade in, and whichever the buy stop or the sell stop got filled, you frantically went and deleted the other one and pressed exit on the other one, and you go, oh, I've just made 10%. Not having a clue what you did, but you could do those things back then. Whereas, I personally then realized that trading fundamentals wasn't for me after they tightened up on all those things.
Well, it was like London, wasn't it? We all had the London breakout system, and that really was the classic time where
it was
2014, 15 is when it stopped working. but we were looking at the pound was doing 150 pips daily range.
Yeah.
In the Asian session, it would go to sleep. So you just had one cancels the other
Yeah.
orders at London. And
Whichever
you
one
literally,
broke out first, you went with
yeah,
it.
yeah. And you could literally make your week's money in an hour a day. That
Yes.
was the classic time. But of course, for those joining us now, there are still opportunities.
Yeah, it's
And
just
again,
different.
yeah, I never use robots. The thing to me with robot, if you've got manual intervention, yes, but otherwise, a robot is programmed to, if we're in an uptrend, it's programmed to buy, and
Mm,
it's not able to see. Well, hang on a minute, there are lots of clues here that this is maybe going to change. And with today, we're there, aren't we? We've just had a bit of a big pullback in stocks. Dollar index can't decide whether the dollar's going to go up or down. And a robot will just keep doing what it's told. So
yes.
I've never had any success with them. And then the only robot, to my knowledge, that did well in historically was FAP Turbo,
Oh, really? You got into that one?
which is
Yeah.
it was a terrible name, FAP Turbo.
Yeah.
And I spoke to the guy that created it. What this thing was doing in the Asian session, they set it up so that it would just take a pip from a slight movement that went on. And then I talked to the guy who created it, and he was telling me that they sold too many of them. They sold 50 odd thousand. And so the brokers who were getting stung every day reverse engineered it. So when
Right.
this move happened, suddenly the brokers widened the spread.
Got you.
And I had that issue because the other thing that I had years ago was I had a gap trading strategy
Mhm.
out at the market open. And I say I had it. It was a Swedish guy I worked with called Goster. I forget his surname now. But he created this EA and it was brilliant. What it would do is it would scan all the pairs at the market open and it would scan the gaps vis-a-vis the spread. And so and then it would calculate, it would place up to 6 trades after 90 seconds.
Mhm.
So it sounds a bit technical, but basically this thing was a surefire winner, and we were making a lot of money. We were only allowing clients to put an extra 50 grand in total in each week because we were hitting the liquidity levels. Anyway, the brokers killed it because they reverse engineered what we did, and then they just played with the spreads, and that killed it as well. So that's actually another interesting thing for folks. Don't convince yourself if you found something that you think is revolutionary and you've found the holy grail, and we've all
Mm.
found it at times, is try it on a live account and try it on a reasonable size live account. Because years ago, I had a guy came to me and he was making 400% a month with this EA, wanted me to sign an NDA before he would let me see it and explain. And I just said, who's it with? And he'd named the broker, an English broker. And I said, and what size account? Oh, $1,000 account. I said, yeah, stick it on a 50 and then come back. Never
Yeah.
came back
No.
because the brokers, a lot of the brokers will play with you if you stick your head above the parapet.
Yes.
In my experience, I mean, if you
Yeah.
find a
No.
decent broker, we have a couple of decent brokers now. I know you were saying you've worked with the same one for years.
Mm,
If you find a decent one, stick with them.
absolutely. There's a good key here. So, someone listening to this that's been trading for a number of years and they're just, getting frustrated, blaming
Yeah,
everybody but themselves. It's the market's fault, it's the
yeah,
dog's fault.
yeah.
Any suggestions from your experience of what they could look at doing?
The solution for me was to stop being so tight and pay somebody to teach me.
Yeah.
I mean, I wasted 2.5 years trying to do it myself. And
Mm,
as we get older, you realize the time is far more important than the money.
yeah.
And the money that I lost was greater than what I paid. If you want to do it yourself, then you have to have rules and structure. And I mean, I say to people, look, the first thing you should do is have a business stroke life plan. What are you trying to achieve? How are you going to get there? And set yourself some measurable goals. And then you need a trading rules. But from the life plan point of view, you want to be within 3 months. I want to be reasonably consistently profit, and most importantly, controlling the drawdown.
Mm,
I want within 6 months to get on a funded account. And
mm,
these funded accounts now, it's another thing. When these first came out, they were just a Ponzi.
mm,
I was approached by a firm 3 or 4 years ago, and they were supplying some of the real big companies, and they sold it to me as, look, it's 30 grand for cost for me. and you'll make your money back in 2 months. Everybody loses. It's a great business model. It's like, okay, yeah, well, I have a bit of an issue with that.
Mm.
Not for me, thank you very much. And so the way that these things were set up were deliberately to trip people up. There's so many rules and regulations that hardly anybody got through. But the biggest earning company at that time was bringing in 140 grand a month in revenue. And the rules were so tricky. They've got to make 10% in a month, very small drawdown, minimum number of trades. You can't trade on a Tuesday without your shirt leg rolled up, or it was all designed. And then the few that got through, of course, they were getting paid this 80% commission out of this huge amount of money coming in the front end.
Yes.
But then about a year or so ago, they started to clean their act up. And also I could see the educational benefit for it, because now you've got the same rules as I had in 2005 working for a fund. If you break the rules, you're out.
Yep.
So I would suggest to anybody who's learning now how to do it is forget the BS on YouTube. You know, if something's too good to be true, it is. Believe me, we've both been there and done that and spent the money and got the badge. Learn to do it old school. You've got to be realistic in your expectations. You should focus on trying to do it on a bigger account. So if you can make 3 to 5% a month on $1,000, it's just everybody gets bored, and then they ramp up the risk, and then they lose it all. But if you could do that on a 100,000 account, now it starts to get interesting. If you can do it on a 7-figure account, you can make a lot of money for not doing any more work.
That's right.
And for me, that was the solution. But with these funded accounts, if you can, educationally, it's a great tool because it gives you the discipline. And ultimately, for me, and most of the people I've taught over the years, it's the lack of discipline that kills them. I said before, I think anybody can do this. I mean, in theory, in principle, it's not that hard, but it's this that screws us up.
Well, you picked on one of the two things I've always pointed to people, and I said, one's up here, your head, and the other's in here. It's your head and heart, isn't it? You've got to control those two, because it's emotions, it's real money. It's great when you profit. It's horrible when you lose.
Yeah.
And then the self-doubt starts, or the silliness starts if you fluke a few.
Yeah. I wrote an article years ago saying when boring is great. If you get to the boring level and you don't get high when you win and you don't get low when you lose, you know you're on your way.
Good trading is boring.
Yeah. And for me, that's the place to be. I don't get excited with it. Crypto did get exciting because it was making so much money in such a short space of time. But this time, because I'd been through it with the dot-com boom, this time I took the stake and took the profit. And that's the way I do it now. So, but it is all about structure, discipline, rules. Nice. And I mean, your website's similar to ours, is that we don't pitch that you're going to get rich quick. And I don't know what you find, but most of the people come to us are on the way out the door. They've tried everything.
They're frustrated.
Yeah. And they kind of realize that all the BS is BS. And this bloke or this bloke actually sound as though that they're legit. Yeah. And so again, the thing is, if you're going to go to an educator or a course or whatever, then dig deep, get Googling, look for reviews. Yeah. You'll always find the occasional bad one, because it's like with brokers. Brokers is a typical one. Brokers pay people to write bad reviews for other brokers. So you never know who's a good broker until you actually put your money with them. And the same with mentoring. And you'll get people occasionally that they've lost, and they've lost because of their own shortcomings, but they then blame the guy that they pay the money to. Correct. So again, we are all responsible for our own actions and deeds. Do the research, do this properly. And I said to people, this is a profession. Yes. It is a profession. You're not from a financial background. I say I couldn't even pass basic maths at school, but managed to make a decent living out of this because, and again, I think for me, it's just repeatable patterns. Patterns are correct. Yeah. Yeah. Absolutely. Looking at, I use the description on some webinars for people. I said, do you remember when you were a kid and you jumped on a bicycle for the first time and there was stuff going on everywhere and it was all complicated, and now when you get older you can just do it? I said trading's a little bit like that, but also you and me, coming from England originally, would have
learned the green, was it the green cross code? I think,
Yeah,
the
yeah, to
crossing the
cross the
road. You
road.
remember that?
Yeah,
And
yeah.
it was look left, right, and left again. And I say to people, do that on your charts, because so many people, they want this moving average and this MACD and something else. I said, you're cluttering your charts with historical rubbish.
Yeah,
Look at the charts, look at the right-hand side, look at what the price is.
yeah.
There's so many people, they start buying it, like you said with silver, they'll buy it like 49.90, and it's like, well, it's
Yes.
going to hit it, isn't it?
No.
Look there, look back the
Yeah,
other side. Oh, last time it bounced there. Guess what it's likely to do again?
yeah.
Look left and look right, and people don't do that, I find, so often.
I think that the thing is, I mean, the marketers don't help, but the thing is that when you look after the event, it looks so easy, and that's what's so frustrating about this. And so
Yeah, yeah,
people tend to concentrate on this bit. And I mean, my thing is look
yes,
left, see what happened before. And then the other thing is people don't realize what's going on. If gold was coming up to 2000 for the third or fourth time, well,
mm,
think of what's going on. The people who bought it at 1800 are getting twitchy because they're thinking, looking left, last time it got up here, it dropped.
mm,
And then the next time, well, now it's done it two times, for crying out loud. Just think probability. If it's done it twice, the likelihood it's going to do it again is greater than not. So at
yes,
least get your stake out.
correct.
And if you're confident it's going to push through, and again, it needs a catalyst to push through. And I say that the time last time when gold got through, we did get up to 2070 and rejected, but when it actually went through, it was something had kicked off in the Middle East or Ukraine. I can't remember. It was one or the other, and it
Mm,
went. So it went for a fundamental reason. I think now, personally, that I think gold will continue to go up. I think we'll be profit taking at 3,000, but I think that the financial mess that we're in
mm,
is going to implode at some point. But having said that, I felt that for the last 2 years. But the other thing, something for people to take away from this is have a look at gold and silver mining stocks. Because last year, and gold and silver often are very poor investments. The gold bulls will be permanently buy gold, buy gold. No, you don't always make money in gold. Gold from 2009 to 2012 was great. The S&P took 5 years to recover after the crash. Gold recovered within a year, and it went from 800 to 19 something. Then from 2012, it went down. Well, the S&P is going up. And so from 2012 to 2018, it was a poor investment. Not only did it come down in value, you have to pay to store it and insure it.
mm,
So if you can catch it at the right time, it's great. So we caught gold and silver from 2022. Last year alone, I think gold was up 30%, silver was up 40%.
mm.
My best silver miner was up 260%.
Wow.
So the thinking is, and this is because of fundamentals with me, the stock at the time was EXK, I think it's Endeavour Silver. It came down to the COVID lows. And again, I've got all the charts set up on all the stocks and everything for COVID lows. After a crash, this is where it stopped ultimately. But if gold and silver's going up and a miner's digging it out of the ground and they've got all the infrastructure and all the equipment and all the men, then the value of what's in the ground is discounted at the moment.
Mm.
So have a look at mining stocks. But last year, we caught a lot of stocks that more than doubled that were mining stocks.
Right. Yeah.
So it's something for you to have a look at. And yeah, it's just a way of getting leverage without using leverage.
Yeah. Great information. Perfect. So you're looking at all these things. You're still predominantly, for your Forex side, a technical trader like me.
Yep.
What's your average day look like now?
I don't do much. I mainly work on a weekend. So
Right.
on a Sunday, when the markets are closed, and again, I find this is the best time to study because nothing's moving, so you're not tempted to get involved.
No emotion.
So there's no emotion. It's just purely a maths come pattern exercise. I look at maybe 20 odd pairs.
Hmm?
And I am looking first on the weekly chart, and I'm just looking, well, is it going up, down, or sideways?
Yep.
If it's going up, I want to buy. If it's going down, I want to sell. And if you're range trading, we'll look at it in a different way. And I'm looking for a sweet spot that will draw my eye. It might be an EMA, it might be a major point of previous resistance, a trend line or whatever. And so that's okay, that's interesting. And then I will go down to the daily to look for multiple reasons. So
Right.
I need 5 reasons for a trade. So I've written them down because I would forget. So I have the 200 and the 55 EMA,
Right.
and I have them on the chart on the daily. I also have where the weekly and the monthly are. I want to know where the big levels are. Fibonacci, trend lines, horizontal support and resistance, whole numbers, double tops, double bottoms, MACD, risk reward ratio. Because if it doesn't give me at least twice the risk, I don't touch it. Candlestick patterns occasionally, and correlation. And so it's a very systematic approach. So now I will go and look at something and think, well, it looked really interesting on a weekly, but the risk reward's poor or whatever. And then I got the next one. So that one, I forget. And if I look at stuff on a weekly, not interested, forget. And the goal is to find half a dozen A-grade trades if possible in a week. And an A-grade ticks all the boxes. And then the final thing is I go have a look at the news to see what could come out that could screw with it. And like for me, the AUD is usually Tuesday morning in middle of the night. So if I see a good AUD set up for a Sunday night, I will often wait until the big news comes out,
Right.
especially
Yeah, that's right. Australia often had their employment or their interest rate news on a Tuesday afternoon our time.
Yeah. So for us, it's the middle of the night.
That's right.
And I might wait till London opens.
Yeah.
And then on a daily basis, I spend about an hour. And as I said earlier, I look at the DAX, I look at S&P, I look at gold, silver, I look at stocks, I look at crypto. And I'm trying to find what's generally going on, because ultimately, where's the big money going?
Yes.
And the big money, prior to COVID, it was a lot easier fundamentally, because all it was interest rates, inflation, and growth. Every piece of red flag news relates to those 3 things. And at the time, all the central banks were trying to get inflation up to 2%. Well, they did a good job there. And then inflation's got out of hand. And growth really is ridiculous, because when you think about how much money was pumped into the economies with COVID, you went to the UK this summer. I went to the UK this summer gone. I couldn't believe the price of things.
It's gone through the roof, hadn't they?
Absolutely gone through the roof. And yet the government, inflation is now at 3%. Rubbish. The reason why inflation is at 3% is all the government workers' pay rises are linked to the inflation. And so a lot of the fundamental stuff's gone out the window. But I have a bias at the minute. I have a bias negative AUD, negative NZD, euro, and the pound. So I am just waiting. I actually caught the pound yesterday from 3 weeks ago, but I caught it within a few pips.
Yes.
And I wait. I will just wait. And if ultimately I look at Forex and it's just chaotic and something else looks more interesting, I'll go do that. I just want to make money. I just want to make money.
That's
I'm not here to play.
No, and that's right. And that's what I think that, we talked about earlier, is that with the ability over the last handful of years for us both to be able to look at other markets, those metals, those indices, those commodities. I said to you earlier, I took a trade yesterday on aluminium. Today I've taken a trade on the Hong Kong 50, and when the sugar market opens in America in a few hours' time, I'll be doing the same, providing there's no massive gap. If we'd had this chat 5 years ago and you started talking about Hong Kong 50 sugar and aluminium, I would have no idea but what they look like on a chart.
It's the same with crypto. In 2020, 21, Bitcoin went up, pulled back, up, pulled back. It did it 5 times, and it pulled back into a couple of EMAs and fib levels and a trend line. It was easy. It really was easy. But the other thing, as we're getting older, my oldest client is 85 years old, and he's still as sharp as ever. But he joined me 15 years ago on a lifetime member. So financially made no money or whatever. But hey,
I've got many of them from years ago.
But I had a good chat with him recently from north of England, and he said part of the reason he's doing it was to keep mentally active. And that's the same thing for me. This is a mental challenge. I don't get highs and lows, wins and losses, but I do enjoy the mental side of it. And I think as people are coming to retirement, so many people don't have a big enough pension. So they've got a financial need to make money, but the other thing is the need to do something.
To do something with their mind.
My father worked in a factory all his life, and the average lifespan 30, 40 years ago in the UK was 69. So people retired at 65 and they were dead by
They drop
69.
dead. Yeah,
Now the average age span's 82, 83. And, you know, if you've got your marbles and you're healthy, then you
that's
want to make
right.
the most of it, don't
But
you?
you don't want to be 82, 83, or 72 or 62 and just sit blobbing watching
Exactly.
Netflix, and which is what so many
Yeah.
people do, unfortunately.
Yeah.
Yeah.
Well, I don't know about you. My average client, when I don't take many private clients nowadays because I'm trying to focus on other things.
Mm.
But my average private client pre-COVID was 50 plus, married, kids have left home, gone
Mm.
to school, gone to university, or left home, gone to work, uh, own business or middle management, starting to panic about retirement.
Yeah.
And both in terms of finance, because most people haven't got enough pension. And then the other thing was to do something mentally, keep them active.
Yes.
Ironically, since COVID, I then got a lot of younger ones
Yeah.
who kind of said, hey, I don't want to go work for this firm for the next 30, 40 years.
Mm.
But prior to that, it was older people. And I say, from a mental point of view and a monetary point of view, you can't beat it. You know, I used to have 20 odd staff working for me, 20 odd subcontractors. I used to have hair and stress to hell,
Mm.
and I would never employ anybody ever again. I
Yes.
have people now that work with me. I have people I've trained and they work with me, but they're all self-employed.
Yes.
And ultimately, if people don't perform anymore, I have to say, I'm sorry, you have to go.
Yeah.
But I have one guy's been with me 15 years. So to be able to do something, to do it from home, to live wherever you want,
Mm.
to not have any staff, it's the best business in the world. It
Correct.
really is.
Yeah, absolutely.
If you can do it. So it's a profession. Learn to do it properly and stick to the rules.
Well, I think one thing that I hope that people take from this is the amount of time it took us both.
Yeah.
Like, it took me 4 years of going around in circles. And as I said at the time, my son at the time was very young, and you start getting those doubts and people saying, really, you should go and get yourself a proper job. And, you know, you got your son to look after, and those mental, I just feel for people that get that, because we've been there.
Yes, for sure.
And also, as you mentioned, now there's more younger people, and of course, everybody thinks that the answer is AI. And as we've said, that, you know, even if you use some form of robot of AI, if you really want to, go for it. But you still need that human common sense to understand how it works, or create it yourself. There's no good just buying something because you don't know when it's going to start working. But there's so much to be said for that mental ability to go, I can do this. I can make 3, 5, 10% a month. And I can choose to go to a prop firm or whichever way you want. And I think that ability to do that and have that decision making, because it keeps you in interest of what's happening in the world as well.
Yeah,
because otherwise it's kind of a lonely old business, isn't it?
Yeah. And definitely.
It was interesting with your comment about why you started teaching, and mine was the same. I won a signal competition in 2006 or 7 or something, when the early days of PayPal and subscriptions. And somebody said to me, rather than me buying the signals, would you teach me how to trade? And that's how it all started. And probably like yourself, I love the community aspect of helping like-minded people who want to help themselves. The odd time you get someone that just goes, I want everything and I don't want to do anything. That's go somewhere else, please. Go to YouTube.
Well, I say to people, you know, it's quite funny because people would book me for a call and they think they're interviewing me, and I'm actually interviewing them, because and I would say to people, look, I am not here to pull you along. I am here to lead you, and you need to do the work. And ultimately, you have to accept the fact you just might not be any good at this.
Or just too lazy for it, potentially.
I've had it in the past with people. They hand the money over and then they don't do the work, and it's like, what are you doing? You know, it's almost as though, well, I've handed the money over now, and it's like, no, there's a serious amount of work to do with this, and if you're not ready to do it, then go do something else.
Correct.
It's because it's draining for us as a coach, and it's a waste of money for them. But the other thing, what I try to do with people is to say, look, create multiple streams of income. Do not just rely on Forex trading, because there are periods of time when it's really easy. There are other times when it's really challenging. And the other thing, you know, and I know, if you get into a drawdown situation and it's so depressing and stressful, because every day you wake up in a negative, trying to get back And as we know, anybody who's ever been in debt, it's twice as hard to get back to zero as it is to get to 10,000
That's right.
profit. And
Yeah.
so the stress and everything. So I said to people, right, well, what's your current skill set? What could you do? You know, if you came to me as a dairy farmer, well, how could you monetize your knowledge teaching other dairy farmers? Or is there something that you've done in the past? Or helicopter? Could you teach people to think of multiple streams of income, and then you're not just reliant on one? And,
Yes.
and the point now for me these days, I don't just want to teach people how to trade Forex. I want to teach them how all financial markets work if they want to go down that journey. But I also want to try to say to them, look, you know, I was fortunate. I was one of the few that are 40 years old with 4 kids and a good business that said, you know what, I don't want to do this anymore. It's depressing me. We're off to go live on an island somewhere. Everybody that knew me were like, running a book, he'd be back in 3 months, he'd be back in 6 months.
Yeah.
And to do that with 4 kids and all the commitment and that you've got is a big leap of faith. But I was fortunate. We'd bought some houses for income, so we did plan it. But so the point is be thinking about how can you monetize your current skills as well as doing this.
Yes.
I mean, ultimately, if you're any good at this, you could teach other people to do it. If you like teaching. If you don't like teaching and you don't like people, then don't do that. You know, you might prefer something that's not involved. But try to learn a skill, or try to use the current skill that you've got to be able to monetize it. And even if you only earn a few $100s from this a week, and a few hundred from that, and a few hundred from that, if that, to me, that's the thing. It's the whole life thing now.
Correct.
So that would be my thing.
No, that's awesome, because I mean, you can, one, it's taking the pressure off the need to have to make money from trading. And 2, when you get good at trading, you can use that additional income to add to your trading account if you wish to, and compound it from there.
Yeah.
And
I mean, sorry, I interrupted.
Oh, no, I was just going to say, I think an important thing for people of all levels, especially new people, is to forget the money to start with.
Yes.
It's learning the how to do the trading. I think is really important, because if you can do the how-to bit, the money will follow. But I sort of describe it like someone, you get a painter to paint your wall. Well, the finishing touch looks nice, but it's all the work that they've done, and the sanding and the prep and the dip stopping and everything else behind the scenes that you don't see that makes the finishing look good. And this is the same with learning how to trade.
Yeah, absolutely. Yeah. I was going to
say
something.
You were going to say something else.
I forgot what I was going to say. Never mind. I'll save it for another time.
No, fair enough. So if someone's like wanting to contact you, how do they get hold of you? What's the process?
We have a website, forexmentorpro.com. I also have another one, which is yourinvestingfuture.com, which is to do with stocks and crypto and things. And again, thank you for inviting me. Not many folks you don't normally get people who are potentially competitors talking to each other, but it's good to have a chat with somebody that's been down a very similar route.
Yes.
The good news for people is that we've been there and done it. We've made all the mistakes that anybody can make and more. And we've also seen it with so many people as well as. So the main thing is try to avoid the BS on YouTube. If it looks too good to be true, it is.
Yes.
And as I said earlier, this is a profession, and you need to learn how to do this in a professional way. And if you don't, I'll leave you with the story of a guy. I was doing a live training session, a webinar, and I was telling them about a guy that came to me 10 years ago. And he said he started off trading and he doubled his account. And so he then doubled his account again. So then he quit his job and doubled his account again, and started taking family money into trade. And I knew what the punchline was going to be. He lost it all. Anyway, there was a guy in the room from Australia, and he'd had financial issues. I found out, I spoke to him afterwards, and he wrote in the chat box, he'd gone from $0 or $1,000 to 75,000 in 4 months, real money. And again, I knew the punch. I said to him, I think you've typed it in wrong. Did you mean 7,500? He said, no, 75,000. So this guy was struggling financially. he was working 16 hours a day scalping Forex, and he'd managed to go from 1,000 to 75,000 in 3 months, and he lost it all in a night. And he, and like the original guy I was talking about, they just got lucky. They were on the biggest flukes streak that anybody could ever be on.
Yep.
And so the point, and I said this earlier, the overconfidence, thinking that you've cracked it, is the most dangerous time. Because I spent 2.5 years and I wanted to make $2,000 a week was my target 20 years ago. And the first weekend I made it, I was all weekend I was on a high. Woo, I've cracked. Oh,
Got it.
oh yes, yes. By the Wednesday, I'd given 1,500 quid back.
Yeah.
So
Risk management.
Again, yeah.
Trading
well,
is good, trading's boring, and risk management.
And discipline and structure.
Yep.
And stick to the rules.
Well, that's a good spot to leave it, because I think we've both had a great journey, both of us. An up and down journey, but a really good one, which you wouldn't change for all the world.
No. It's given me the chance to live in beautiful parts of the world. I live in Portugal now. The choice of being able to do what you want to do is awesome. As we say, we're both from the UK. We've both seen the state of it now. I certainly would never, I would never have gone back anyway, but you look at it now and it's very depressing. So to be able to live in the sun and
Portugal and New Zealand are not too bad places to live, are they?
No, they're very nice. They're very nice. Anyway, pleasure to meet you.
Thank you, Marc. Lovely to have you on here. And I'll put a link to your site and our site, and people can contact either of us and ask further questions if need to. But thank you very much for being here. Really enjoyable. And thanks for your time.
Welcome. Thank you very much.